Folks, we're starting it off early today. As you might expect, we gotta love it, okay? We're talking about Walmart stock today. Just reported earnings in the pre-market, one we are very much waiting for. This will set the tone for retail for the week, and obviously, heavy retail week in terms of earnings. So, we'll see what they were able to post. You can see in the pre-market, they're already trading downward. And I kind of found this to be an inevitable situation, unfortunately. If you look at how Wall Street's been treating a lot of these stocks lately that have had decent run-ups and incredible years last year that are facing tougher comparables, they've been getting obliterated even when they're posting great numbers. So Walmart I expected to beat on an EPS and a revenue standpoint. But even if it did, I could see the stock still being down. Even if they boosted guidance, I could see it still being down. Because year over year, they were expecting a lot less growth than they saw last year, which was unprecedented growth. So I think it's outrageous in my opinion that Wall Street has no idea what they're talking about, and 2-year growth is great. On an annualized growth rate perspective, beautiful. Let's look at these earnings though. You see year to date the stock's up only 2.8%, pretty minimal, and up 11.17 in the last year. Seems kind of crazy to me. I think it should be probably up a little bit higher, and you think about how they were able to grow from a revenue perspective. There it disappeared for some reason. But from a revenue perspective, they were able to grow significantly more than they did the year prior. We're talking about 10% growth, trading at a market cap of $400 billion when it's that's just, they're making $500 billion in the year in sales. What's going on here? Let's look at these earnings. So non-GAAP EPS here of $1.78 beats by 21 cents, and a GAAP EPS of $1.52 misses by 5 cents. So not quite what I expected from a GAAP EPS standpoint. I thought they'd be able to beat that for sure. The Yahoo estimate showed me 151, which they did beat technically, but I thought they'd be able to put up a little bit higher of a number than that. So it's a miss on that aspect. And from a revenue standpoint, this is fantastic. They were expected to decline sales year over year. And here they're putting up $141 billion, which is an increase of 2.4%. They were expected to decline sales. They beat by nearly $5 billion. That is freaking fantastic. I don't know what more you want. I don't know. I don't know what more you want. That's good. So, and from a comp sales standpoint, they were at a 5.2% increase versus a consensus of 3.12. For a Sam's Club perspective, they increased 7.7 compared to a consensus of 2.98. They thought wholesalers were going to slow down because last year they posted such a fantastic year, but apparently not. So I'd like to see Costco's numbers too. For guidance, they're expecting next quarter to put up a 6 to 7% comp growth number, which is incredible, and an EPS of $1.30 to $1.40 versus a consensus of $1.31. That's quite incredible, if you ask me. That's fantastic. Let's look at the full year guidance here too. I'm gonna zoom in on that for you. Don't worry. Ooh, that's quite zoomed in. Look at how the aspect, it's just blurry. Resolution's not looking good on this one. So let's look at the new guidance. They previously expected a decline, low single digit sales, but excuse me. That's pretty rude if you ask me. Let's just look at that again. Or maybe we won't. Let's come back to that, okay? We're coming back to that. We let it load, okay? Zoom back out. Don't mind me. I like being zoomed in a little bit, though. And on top of that, though, this is some wild stuff. Strong growth in advertising business. Nearly doubling sales in Walmart US compared to a year ago. E-commerce sales were up 6%, and again, that's a big focus for this company, is e-commerce, how they're able to build market share. 103% higher than the level generated in 2019 is incredible. We're talking about again, annualized growth rate is fantastic on this company. The fact that they're only 6% up this year may seem like it's not nearly as good as what they wanted, but look at the full picture here. From 2 years ago, it's up 100%. That's fantastic. Operating income was up 21%, which is fantastic. It's crazy. They repurchased 5.2 billion shares year to date. $5.2 billion in shares is quite a lot, which is only 25% of the announced buyback, which means there's a lot more to go. Pretty crazy to see. As far as guidance is concerned, they expect e-commerce to reach $75 billion by the end of the year. Interesting comparison here. I don't know why they bother mentioning this. Dollar General had total sales last year of $34 billion, and Macy's at $17 billion. I don't know how that's relevant to Walmart's e-commerce, but it is what it is. So let's look at this press release. They should have the guidance in here as well. So let's look at some of the finer details. Total revenue was negatively affected by $8.9 billion related to divestitures. So actually would be a better quarter than this even. So what can I say? Total revenue would have increased 0.6 if you exclude currency to 138. So obviously mostly done on a constant currency basis, just so you're aware. They grew market share in grocery. Fantastic to see that. You love seeing them grow market share. Comp transactions were strong at 6.1%, led by Walmart stores. And there you go. E-commerce is on track to make it to $75 billion by the end of the year. That'll be a fantastic number for them if they can achieve that. You're talking about growing e-commerce market share. That is where it's at for them. Okay, that's a focus. Operating income increased 20.4%. That's fantastic. E-commerce sales grew 6%, and again, 103% on a 2-year stack. But no one on Wall Street's looking on the 2-year stack. Okay, no one is. Growth in advertising business. Sam's Club comp sales 7.7, and e-commerce sales grew 27%. So again, wholesalers doing a beast of a year and 2 years really. Wholesalers doing well. Membership income increased 12. Get out of here, you pop-ups. 12.2%. With member count at an all-time high. Pretty crazy. International sales were $23 billion, which decreased 15%, negatively affected by $8.9 billion in divestitures, as they mentioned prior. So you'd like to see better in terms of international sales, but that doesn't scare me too much when their overall sales were $5 billion better than expected. In my opinion, at least. Maybe that's just me. Yeah, that's fantastic. Consolidated operating income at $7.4 billion. What else can we find out of this? What else can we parse? Operating cash flow, so far year to date, down for sure. Dividends have increased 0.9%. Again, they raised the dividend by 1%, so not too big of a shocker there. That operating income line, it's nice. It's pretty nice. Growth of 21.4%. This year, which is fantastic. It's good to see. Growth in all of these aspects is beautiful for you, whether it be on constant currency basis or not. I love it. What can I say? From a Walmart standpoint, you saw net sales increased. Net sales increased 5.3%. Beautiful stuff. Yeah. I mean, what can you say? Average ticket up big, transactions big. Yeah, I love that. This is where we see normalization, right? So last year we saw transactions total decrease by quite a bit, and the average ticket increased by quite a bit. Now we see it stabilizing more as more people, you get more foot traffic into stores. 6% up in transactions, and average ticket stayed pretty flat, which is fantastic because you're talking about more transactions in the same average ticket price. That is fantastic. Obviously, that number will decrease as it goes. The more shoppers you get in there, they more likely that they're not going to necessarily buy as much as others. Last year they were hoarding like crazy, so you're going to see an issue there. I don't find that to be an issue when you see average ticket go down. It's inevitable based off a 27% increase last year. Good golly. International sales down, as you can see here, down on pretty well every aspect. And from a Sam's Club perspective, up on every aspect too. Average ticket, and transactions increased as well. So really good quarter for them and what they're able to do there. So 13.9% increase in sales. Here's the guidance that we were looking at prior. So they were expecting a decline from consolidated. Now they're expecting slightly positive, which is good. Comp sales growth they're expecting from Walmart to be up 5 to 6% now, and Sam's Club up 7.5 to 8.5 growth in both of those aspects. So they're boosting all this guidance here. Crazy stuff. International sales will decline at 21.5 to 22.5, which is less than they were expecting prior. Operating income is supposed to increase 9 to 11.5% growth there. Crazy. And an EPS standpoint, they're very determined here, 6.20 to 6.35. So that's good stuff to see. I like seeing it. Let's look at this balance sheet on this company and see what they were able to do. Obviously, great quarter for them. We're going to be looking at the far left column and the far right column for a full year comparison. That's what I like to do. I do. Total current assets right now sitting at $78.2 billion compared to $64.9 of a year prior. Growth in really inventories and cash equivalents. Total assets in general at $238 billion compared to $237 billion. Slight growth there, so nothing really changed as far as that's concerned in terms of the assets. So nothing too bad there. Liabilities, total current liabilities saw a decline, 81.9 previously, now sitting at 81.1. So good to see that. Certainly, if you look in terms of long-term debt, that decreased slightly as well. Stockholder equity saw a decent increase here at $87.1 billion compared to $81.1 billion. So they did see an increase there. Stock's looking good to me, honestly. I like this company right now. I like what they're doing. I like the stock, even though it's down pre-market. It's my largest position, if you might know. So I own quite a bit of Walmart, a good amount. So that's what I got for you, and I hope you have a good one.